Your mortgage renewal is coming up, and you're not alone. According to CMHC estimates, approximately 60% of all Canadian mortgages are due for renewal by the end of 2026, which is around 1.15 million mortgages nationally. For millions of homeowners, the new numbers aren't just bad, they are shocking. The CMHC also projects that about 60% of those renewing will face payment increases between 6% and 20% on average. But many who bought during the pandemic could see much higher spikes. That's not a small bump. It's like your bank suddenly adding a new car payment to your monthly bill. For a typical $500,000 mortgage taken out during the pandemic, that could mean an extra $757 a month. That's over $9,000 a year just gone. Your bank is banking on one thing, your fear. They are counting on you being too busy, too overwhelmed to do anything about it. They send you a renewal letter with their standard rate, knowing that most people will just sign it to make the headache go away. In that one moment, they lock in thousands of dollars in extra profit straight from your pocket. But what if I told you they have a massive weakness? In this high-stakes game, your bank wants you to think they are holding all the cards. But the truth is, you hold the power. They don't want you to know that this payment shock isn't the crisis you have to survive. It's an opportunity. I'm Jyoti Shamnani, and in this video, I'm going to expose the 7-step negotiation hack that will not only erase that $9,000 increase, but could also unlock tens of thousands of dollars in hidden equity to help you move into a better home. No, this isn't about downsizing, it's about upsizing. I'm a realtor specializing in the West GTA, and for the past year, I have been hearing a growing concern from homeowners. With Ontario holding nearly half of the nation's mortgages, hundreds of thousands of renewals are happening right here in the GTA. Let's take a hypothetical family in Mississauga, for example. Let's say they bought their home in 2021 with a fixed rate of 1.47%. Their renewal offer could land at over 4%. That would make their payment jump hundreds of dollars a month. That's thousands of extra dollars a year they would have to pull out of thin air. And with 2 young kids, their budget would already be at the breaking point. They would feel trapped. Or consider a homeowner in Oakville with a variable rate mortgage who sees their payment reset with some facing spike of over 40%. This situation becoming more common across Ontario, and we are seeing heightened renewal activity and rising late payments firsthand here in the West GTA. These aren't just hypotheticals. This is the new reality for millions of Canadians. The banks are ready. They have a system designed for this. But today, I'm tearing a page out of their playbook and showing you how to beat them at their own game. As a realtor, I have guided families in the West GTA to turn their situation from a financial nightmare into a life-changing move. And it all begins when you realize one critical fact: your bank's first offer is a trap. So let's get into it. The 7-step negotiation hack to save your home and leverage your equity. Don't skip a single one. Each step builds on the last, and missing one could cost you thousands. Step number 1. Audit your mortgage 120 days early. Your lender has to send you a renewal statement at least 21 days before your term is up. This is a manufactured rush. It's like a store putting up a going out of business sign with only 30 minutes left to shop. They know you will feel pressured to just take their offer. Here is the power move. Mark your calendar for 120 days, 4 full months before your renewal date. This is the magic window where you can switch to a different lender penalty-free. It's like your cell phone contract ending. You wouldn't let it auto-renew at a higher price. You would shop around. This one action puts the negotiating power in your hands. You're no longer their captive client. You are a free agent. Call your bank 4 months out. Get their best renewal rate in writing and tell them you are exploring other options. They have quotas to hit, and losing you is a failure. Suddenly, their best offer might get better. But we are not taking it. We are just getting started. Step number 2, ditch the stress test on renewal. This is the biggest and most misunderstood rule change in Canadian mortgage. It is your ultimate trump card. For years, the mortgage stress test was a wall built around your current lender. Even if another bank offered a better rate, you were trapped because you couldn't pass the brutally high requalifying rate to go over the wall. That trap is gone. As of November 21, 2024, if you're doing a straight switch, moving your existing mortgage balance to a new lender without changing the loan amount or amortization, you do not have to pass the stress test. The government gave you a key to the gate. You can just walk through and shop anywhere. This is a complete game changer. It means you are free to shop for the absolute best rate in the entire country. Your bank knows this, but they are counting on you not knowing. When they give you an offer, your next sentence is, "Thank you. I'm aware I can now switch to any federally regulated lender without being stress tested. So I will be shopping around." Watch how fast their tone changes. You've just declared that their monopoly over you is finished. Step number 3, shop like a pro and beat their posted rate. Rule number 1 of mortgage renewals: never accept the posted rate. Think of it like the sticker price on a car. It's just a suggestion, a starting point for negotiation. That first offer your bank sends is almost always their inflated posted rate. As we head into 2026, banks might have posted rates around 5%, while their secret discount rates for savvy clients are in the low 4s. This is where you take their rate and partner with a mortgage broker. A broker is like a personal shopper for mortgages. I connect my clients with trusted brokers who don't work for one bank. They work for you, with access to dozens of lenders, including credit unions and mono lenders who are often hungrier for your business. Tell the broker the rate your bank offered. They will almost certainly beat it. When they come back with a better offer, let's say 0.4% lower, you have a new weapon. A 0.4% difference on a $500,000 mortgage over 5 years is over $10,000 in savings. That's the $9,000 payment increase we talked about, completely gone with money to spare. Now you're calling the shots. We are about to dive into how you cannot just save money, but actually use this moment to move up. If these numbers are already making your head spin, I have put together a free guide called the Right Sizers Playbook, where I have shared 3 hidden secrets that every GTA homeowner should know before upsizing or downsizing. It will walk you through steps that could help you in your specific situation. Plus, you will also receive my Strategic Advantage Mortgage Calculator. You can plug in your numbers and see exactly where you stand. Or if you would rather have me guide you through, just reach out to me by booking a 30-minute strategy call from the link is in description. It's totally free, and I am here to help you in your journey. The first 3 steps were defense, protecting your wallet from payment shock. These next steps are pure offense. This is where we turn the tables and use the bank's money to build your future. Step 4, pull your equity out tax-free. For years, your property value has likely grown. That gap between what your home is worth and what you owe is your equity. Think of it as a savings account locked inside the walls of your house. It's your money, but you haven't had the key. When you renew, you don't just have to switch your mortgage, you can refinance it. A refinance is the key to that locked savings account. You take out a new, larger mortgage and pull that equity out in tax-free cash. Is your current home feeling cramped? That equity can become the down payment on a bigger home. For example, a family in Burlington might feel stuck in their starter townhome. By working with a mortgage specialist, they could refinance at renewal, potentially pulling out $150,000 off their equity. As their realtor, I would help them use that to buy a detached home. They might think they have to downsize, but instead they could move up. Step number 5, extend your amortization to 30 years. This is a powerful tool for managing monthly cash flow. Think of amortization like a payment plan. You can pay for a couch in 12 months with bigger payments or stretch it to 24 months for smaller ones. Extending your mortgage from 25 to 30 years does the same thing. It stretches out the payments, making them lower and more manageable. Recent rule changes now allow for 30-year amortization for many buyers, including first-time home buyers and those purchasing new construction. Let's run the numbers. On a $700,000 mortgage at 4.5%, a 25-year amortization is about $3,850 a month. Extend that to 30 years and it drops around $3,550. That's a $300 per month saving that can make all the difference. The trade-off is you pay more interest over the life of the loan. But this is a strategic lever you can pull to get into the right home now, with the option to make extra payments later. Step number 6, use the balanced market to your advantage. For years, the real estate market was a frantic game of musical chairs with not enough seats. The 2026 market is different. It's like the music has slowed down. More chairs have been added, and you can actually look around and choose the best seat instead of desperately grabbing the first one you see. Prices have softened and inventory is rising across the country. Here in the West GTA, this balance gives buyers something they haven't had in a long time: negotiating power. Sellers are more willing to talk. For someone looking to upsize, this is the perfect storm. You can sell your home and then take your time finding the next one, making a firm offer without being dragged into a bidding war. You can use this balanced market to buy your dream home at a fair price. Step number 7, layer your down payment with hidden accounts. If you're moving up, you will need a bigger down payment. We already talked about using your home's equity, but there are other sources most people forget. It's about using all the tools in your financial toolbox, tools the bank hopes you don't know about. Take the First Home Savings Account, FHSA. It isn't just for first-time buyers. If you haven't owned a home you lived in during the past 4 years, you might qualify again. And don't forget the RRSP Home Buyers Plan. As your realtor, I work with financial experts to ensure my clients combine a refinance of their current home with funds from an RRSP to create a massive down payment, letting you buy that large home without wiping out your savings. So let's bring it all together. That fear of a $757 payment jump is real, but it's not a death sentence. It's a trigger for action. First, you play defense. Audit your mortgage 120 days early. Use the stress test exemption to shop with any lender and get a pro to find a rate that saves you thousands. Then you go on offense. Open the vault of your tax-free equity. Use a 30-year amortization to lower payments. Leverage the balanced West GTA market to buy with power. And stack your down payment with every tool you have. Your bank is betting you will do nothing. They are betting you will just accept a renewal that costs you an extra $9,000 a year. But now you have their playbook. You have the leverage. This isn't just about surviving your renewal. It's about taking control and using the moment to build a better life for your family. The Greater Toronto Area market is complex, and every situation is unique. As an expert in the West GTA, I have a pulse on the Mississauga, Oakville, and Burlington cities and can build a personalized strategy for your upcoming renewal, whether you just want to save money or explore an upsize. Click the link in the description to book a free, no obligation strategy call with me, or download my Right Sizers playbook, where I have shared 3 hidden secrets that every GTA homeowner should know before upsizing or downsizing. It will walk you through steps that could help you in your specific situation. Plus, you will also receive my Strategic Advantage Mortgage Calculator. Don't let the banks dictate your family's future. Don't downsize out of fear. It's time to upsize with a plan. What is your single biggest worry about your upcoming renewal? Let me know in the comments below. I read and respond to every single one.